All right, so let's take a look at what we have here. Every Tuesday, 3 p.m., we talk about some small subject that we bring in. And on Saturday, I do an hour. Last Saturday went out for an hour and a half. Not good, but that's how we want to transfer our knowledge to you. And if you look at this YouTube channel that we have, and if you simply search, so right in here, if you type tax planning, like I do right here, if you come to our YouTube channel, you type into this, you're gonna bring up all of our tax planning topics that we have throughout our history. So a lot of these, and you can look at, like this is 2023 tax planning, and a lot of folks are asking us about fiscal year. So this today, and we are going to talk about that. Okay, let's just go ahead. This is part of the tax planning, right? And maybe when you look at your taxes, you felt like you're always paying too much taxes than what you really made. Maybe your fiscal year is not right. Then the folks' question to us is that, okay, Ying, tell us how to do that. So this is the 30 minutes to just give you that answer, how, right? So, okay, let's get going. And now you see my PowerPoint. That is how I do my webinars and use that to guide you, guide me, so we can get things accomplished, right? All right, so with that said, let's just go start our webinar topics here. Having a fiscal year. Fiscal year just means that it's not a calendar year. Calendar year is what? It's from January to December, but our fiscal year can start from any month, ends the following year, the month before. So for example, your fiscal year could be April. So you start on April 1st, and then you end on March next year. So that would be your fiscal year, okay? So now, let's talk about how, why, and we want to do that. Oh, right before that, I want to introduce myself. I am the CEO of Community CPA. Yes, the powerful person who got the company together. Yes, I founded the company back in 1998, but really, trust me, and all these people we have in our firm, the professionals, the staff, the partners, the managers, I'm telling you, we can't live without any one of them. So even though I give myself a really big title, but the work is done by this amazing 40 people, 40 professionals that in our firm. We collectively speak 9 different languages. I don't speak 9 languages. I do speak Mandarin, Chinese, and also English. But we have other people speak Spanish, speak 9 different other languages. So the other thing is our office, ever since we started back in 1998, we open 6 days a week. It's just reflected of our spirit of hardworking, am I right? But of course, we're not slave drivers. We don't, treat our professionals that way, and we go on 2 different shifts, right? They go on Tuesday, Saturday, or Monday to Friday. And we do have online appointment capability. You go to CommunityCPA.com. You can book my time, and I'll come online, talk to you, and resolve your question. The guarantee is that if I don't answer your question, if I didn't resolve your issue, and we won't charge you. Isn't that amazing? And we always be able to resolve problems for you in that 45 minutes. And I'm not even kidding. That's how we do it. So I do want to make sure that you know me, know my firm. Let's proceed. And this is the 2 books I wrote. The first one, 8 a.m., I wrote in 2019. And 10 a.m., I finished writing that in 2023. So now both books are on Amazon and, Barnes & Noble. You can buy them online. And, one thing, if I have to say something special about the book, which is these books are stories of our clients. Of course, the confidentiality is a concern, so the client name are not the same. But it is a experience collectively 10,000 people's experience in one book. So we talk about starting up the business at 8 a.m. and we talk about growing your business at 10 a.m. And I am writing the 3rd one, which is appointment with Ying at 2 p.m., which is expanding your business. Not the same as growing, expanding. All right, no responsibility disclaimer. You know what I mean. Just make sure you take the knowledge seriously, to heart, and double check, triple check. I sometimes have clients send me a message saying that, oh, I was just talking to my CPA, my other CPA, and she said that it was not right what you said. So it turned out to be that our folks are not really understood what I said at the time. So it is really important that to double check, triple check. We won't be offended. We just want the best for you. Just want you to know that. Benefits for having a fiscal year. Okay, so that's where we start, right? Small business usually think about fiscal year for two reasons. When they come to file their taxes, say they form the company in November, so December come around and March they need to file taxes, they're like, what? I just had 2 months operation, you make me file taxes? What? That would cost me so much to do. So that's when they suddenly remember, oh, that's just not cool. Why do I have to do that? Why do I have to, file taxes like this right away? Then the other reason is that they actually ended up making money and right in December. They made a bunch of money in December and they haven't even had a chance to spend it yet. Then the tax is due. So these people will be like, what, Ying? So because by the time they do taxes, it's already April, right? So by the time April arrives, they already spent all the money that they made in December, but the year ends in December. So the calendar year ends in December. So what happened is they got a bunch of income. There's no expenses. There is nothing they can deduct, right? So these are the two major reasons why small businesses just like, puzzled. Why do I have to do that? And the business that experience obvious high and low periods during the year will be somebody most suitable to adopt fiscal year instead of sticking with the standard. Okay, because when you do that, you actually would be better capture what's going on with the business and make it better on paper. Because imagine that if your year doesn't go with your operation, when you present your financial statement, it doesn't really reflect the real health of your company. It makes the financial statement easier when you have your tax year lined up with your real income and expenses, right? And especially if you have a lot of inventory, at some point of time in the year, you have a lot of inventory. And at some point in the year, you have zero inventory. And you want to choose that zero inventory time to be your end of the year. So that may not be December, folks, right? So those are the reasons, the nuances in business a business owner need to know. So you need to upgrade your years. And the other thing is that, let's say if you have a partnership business and you end your year, say in April. So you issue K1 in April, right? So let's say my year ends in April of 2023, I issue K1 for April, year end April 2023. So now you are still not done with 2023 yet. So by the time you arrive 2024 to do your 1040, you actually know exactly what to do with your K1, if income is too high or what. So you have from April all the way to the end of 2023 to plan your income strategically. So that is a deferred reporting pass-through income. That is a huge benefit. And a planned income from pass-through entity before filing 1040. Obvious, right? For pass-through. And also it gives time to implement any appropriate strategies. All right? And match income and expenses is even, to me, I am really coming from the accounting background, right? I just did accounting my whole life, so I don't know any other professions. But on the accounting side, I like the fact that when you are on fiscal year, you actually match your income with your expense. The reason I say that is, of course, you can match your income with your last year's expense, but is that a real match? It is not. If you're in construction, you understand what I'm talking about. If you have a $200,000 income coming in, and then you work your construction project, all of the materials, things, labor costs, material could skyrocketed, and the labor could be more expensive. You want to match your income with what is supposed to go with this income. You don't want to report your taxes when you just received the $200,000. Oh yeah, I will just take last year's income matched to this $200,000. That's not a right match. So for that reason, we say that every business should think whether you should be in fiscal tax year instead of calendar year. Okay, does IRS allow fiscal year? The answer is yes. If you are a C corporation, IRS lets you choose between calendar year and your fiscal year. You just choose. IRS let you. So let's say if you set up a C Corp, you want a year to be whatever, you just do it. There's no justification needed, you just need to set it up that way. But if you are a partnership and S corporation, because it is a pass-through entity, it is not in line with your 1040, so you need to get a permission from IRS before adopting the fiscal year. But the answer is yes. Yes, you can do this, and you just need to make sure that you do it right, file the right form. So does IRS allow the fiscal year? We already said is yes. But there is a little bit of twist in S corporation and a partnership, because we already said that you have to get permission, right? Then you sit here goes, oh, okay, so what do I do? And am I going to be rejected? Let's look at this slides here. So S corporation and partnership must be use permitted year under this section 1378. Permitted years in a tax year are two kinds. One is calendar year, is a permitted year, and then the other one is any other accounting period for which the corporation establishes a business purpose to the satisfaction of the IRS. So what's gonna make IRS happy? Let's keep on going on this slide. A business purpose fiscal year may be automatically established if it is 1, 2, 3. So what we're saying is that IRS is satisfied automatically if you are the following 3. But if you are not the following 3, and then IRS can also be satisfied if you can prove the 25% of mechanical test, right? So, okay, now let's go to see what is this 25% of mechanical test. Basically, let's say we have a year, we have a 12 months from April 1st to March 31st. This 12 months, we are making $100,000 gross receipt, which is the total sales, 100,000. So what IRS says that you are a fiscal year if your income of this April 1st to March 31st, there's 2 months in that year, is over 25% of your total gross receipt. So if you got a $40,000 you made, and in the month of August and September, because you're a construction company, or maybe even from May into June, so if you have 2 months that is over 25% of your total gross, then you qualify for fiscal year. So those are the things IRS considers automatic, and I agree with you, you just do it, and I will let you do it. So that is where IRS says, yes, you can elect to be fiscal year. Then now, adopting a fiscal year as a C corporation, remember I said that C corporation, you just go ahead, define that, IRS will be okay. There's no such a thing about, making IRS to be satisfaction, to have IRS be satisfied first. But if you are a brand new C Corp, you just select whatever you want, right? But what if you're already operating and you just need to change now because you realize your business natural cycle is different? Then you need to file this form, 1128. 1128 is largely used by the consolidated corporation entities. But in this particular case, if you already have a C Corp, you are on calendar year. Now after listening to Ying, you are like, no, I want to be a fiscal year. Then this is the form you use. So I have it right here display for you. Then if you want to adopt a fiscal year as a partnership as corporation, and you need to get permission from IRS before adopting it. If you file your return already, want to going forward to get that status, the new fiscal year, then you will file the form 8716. And I have this one right here for you folks. This is the form you file with IRS to make your fiscal year going forward. Okay, you may say that, oh, Ying, I'm going to do that right now. And my fiscal year should be starting from November 1st to October 31st. Now what am I going to do? You know, I have 2023. I already did this January to December thing. No worries. And you will submit the 8716 and get approval from IRS. IRS will let you know. They're going to send you a letter to tell you that we approved it, whatever you do. And then what you do is you're going to file a year from January to October 31st, a short year return for your S corporation because that finish your year, okay? It's a short year. Then you will be filing your S corporation starting from November 1st to October 30th for the next year. Make sense? All right. So of course your filing due date will change, right? S corporation is still 2.5 month from the fiscal year ending. So you know how to calculate that. So let's say if you are ending in October, so that means your due date for S corporation return is actually January the 15th next year. Makes sense, right? All right. So what about you got a C Corp, but you're electing it to be S Corp? And are you going to file 8716? No. Hold on to your horses. And in that case, you need to do the election of fiscal year in the election document itself, 2553. So let me show you what that means. So when you electing a status, and then you have this form, 2553, did you see that section F2? There. And you're going to put in your month and the day. So not year, okay, month and day. So that says fiscal year ending. So if you are the example I was talking about, we end our year on March 31st, okay? So you're going to put in March 31st right there. So that's where the S corporation would be electing fiscal year when you are doing a status election together. Same thing. And remember, you have to get permission from IRS. So that means it is not automatic okay. Not like C Corp. So you need to get the letter confirmed. If you don't get the letter, call IRS. So that needs to be confirmed before you go on to do your fiscal year. All right. I hope this little short time give you some really useful information. And this is our last slides and an email, Catherine at CommunityCPA.com. She is the one telling us what to do. And then your phone call to her about, hey, let Ying talk about fiscal year tax election, and that worked. So I'm here today. And our phone number is 515-288-3188. Our YouTube channel is Community CPA. You find us, subscribe to our channel, give us a thumb up whenever the content is good. And just ignore how I look in the system and just go for content, okay? That is the only promise I can give you. And we open 6 days a week, folks. If you can find another CPA open 6 days a week, and let me know, because I think we are the only one in United States of America. I'll talk to you again and on Saturday. Bye.